So in the past few weeks, we've talked about both the Paycheck Protection Program, also known as the PPP, and the EIDL, but we haven't talked about the Main Street Lending Program. So we're going to talk about that program more today. Hi, my name is Chris Passmore, CPA. So what is the Main Street Lending Program? It hasn't been as widely reported on as the PPP or the EIDL. Well, it's a recovery program or a loan program created by the Federal Reserve back in April to help medium-sized companies that were in healthy condition before the impact of COVID-19. That's in contrast to programs like the PPP or the EIDL, which was designed to help companies that were in distress. So this is capital for those medium-sized companies to grow, get through this year, have access to capital they may not have had access to through traditional banking routes. And so it's designed for companies that are less than 15,000 employees and $5 billion in revenue. So that's another big difference between the PPP and the Main Street Lending Program. It is targeted for much larger companies. And I need to stress here that it is designed for companies in sound financial condition. When you went through the Paycheck Protection Program application process, it was a fairly simple process where you reported payroll, made a few certifications, sent that off to the bank, and then was approved. The Main Street Lending Program, if you need capital, is a traditional application process like you would apply for a line of credit with your bank or other capital loans that you may have had for equipment, medical equipment, buildings, and so it is a much more stringent process. So what are the terms of the Main Street Lending Program? Well, these are designed to be 5-year loans, and the repayment terms are fairly generous. There is no principal repayments in the first 2 years. The first year, there is no principal and no interest. So in year 2, you do begin repaying interest, and then you have principal payments in years 3, 4, and a balloon payment at the end. In year 3, you have a 15% repayment of capital. Same in year 4, 15% with the balance at the end. The interest rate is pegged to LIBOR plus 300 basis points. So it is a very generous program, and it does have the favorable features with the deferred repayment amounts. So the loans itself can range greatly in size. It can range anywhere from $250,000 all the way up to $300 million. This is based on a number of factors, the size of the company, but it is at a minimum $250,000. There are some important restrictions you should be aware of if you do take a loan through the Main Street Lending Program. Specifically, you're not allowed to pay dividends, repurchase common stock, or make capital distributions for the entire period of the loan, 5 years plus 12 months. So that's 6 years that need to be deferred if you had any plans to make distributions, buy stock back, or other equity-related programs. In addition, for any highly compensated executives, roughly at an amount of $425,000 or more per year, there are limits for increases. So you would not be able to do that again for the 5-year period of the loan plus 12 months. So those are the key terms. It is a program available to medium-sized companies that is to support our economy right now. So this isn't a bad program. It may not be accessible to all. It might not be the right decision for all. So if you would like more information on the Main Street Lending Program, please reach out to me directly, and I'd be glad to talk through the benefits and possibly the drawbacks of this for you and your company. Thank you, and I look forward to speaking with you in my next video.